Okay, what's up, guys? Good morning, good afternoon, good evening, from wherever you're watching me from. My name is Retracement, and I'm a forex trader. Right? So, in today's video, I would like to talk about the technical tool called Fibbonacci. Right? So, I would like to talk about Fibbonacci in today's video. Right? I will try as much as I can to explain and make it short. Right? So, without any other say that I'll do, let's jump right into the video. So I believe everybody can see my screen. I believe you all can see my screen. So let me show you guys. Let me go to GDP. So I would like to make reference to something I've seen previously in my other videos, right? So I would like to say that you all remember, you know that the market moves in what? In three forms, right? The market moves in three forms. First, we have the what? The uptrend, right? We have an uptrend. Then secondly, we have a what? The down. We have a downtrend. Let's ask about this. So we have a downtrend. And finally, we have a what? A consolidating market, or you can call it a what? A ranging market, right? Because the market is actually ranging. So although this is not this is just like a blueprint, right? These things are just like blueprint. This is not actually how the market moves, right? The market moves in highs and lows, but it's not like it's going to be perfect like this, but this is like a blueprint, right? So with that being said, we have an uptrend right here, we have a downtrend, and then we have a ranging market right here. So in the case of a Fibonacci, this is the two I'm talking about right here. This is the two called Fibonacci. These two right here. This is Fibonacci 2. You can also see it right here. Right? This is the Fibonacci 2. So how do you get a Fibonacci 2? You can click on this. You can click on this area right here, right? Click on this, and you will see Fibonacci retracement. Look at it here, guys. So this is it here. You can see this Fibonacci what? Retracement. This Fibonacci retracement, right? So how do you make use of this Fibonacci retracement? So first of all, let me bring it out here and spread it so that you see. This is it. So actually I've had mine what edited. I edited mine, but let me just take it back to the way it will be once you get yours, right? Assuming you have not edited anything or set anything up, right? So let me just so you see it will be like this. So this is how what it will look like. It will look like something that you can see that they have a very long list. This is it. Yeah. So, but the part we are paying attention to, right, this Fibonacci retracement and these zones are just for taking profit. So we are paying attention from this right here. We are paying attention from here to what? To this place. We are paying attention from 0 to 1, right? From this 0 to what? To 1. So you can say this is 1%. This is what? 0.1 is this is 0.1, this is 1%, right? So I have 1%, 0.7%, 6%, 50%, right? So this is 70%, 60%, 50%, 30%, and what 20%, right? So we have 10%. So they are in percent, you can call them in percentage as 10%. This is 10% Fibonacci retracement, this is 70%, this is 60%, this is 50%, and this 30, this 20, and this what 10, right? This is the 10% up here, right? This is just zero. This place is where we start from. So that has been, I believe that has been cleared. Sorry, let me wipe this off too. So I believe that has been cleared, right? So with that being said, let me move into what I have for today. So where and when do we trade Fibonacci? Where and when do we trade Fibonacci? Where and when do we trade Fibonacci? So like we said previously, we have an uptrend. And give me a minute, guys. Give me a minute. Let me delete all of this. So, like we said previously, we have an uptrend in the case of when the market is moving what upwards, right? So, and then we have a downtrend in the case of when the market is what dropping, right? And then we have what a consolidating market. So in this case, the market has no actual direction. In this case, the market has no actual what direction. So we only trade Fibonacci. Fibonacci works with a trending market. So I want you to put that down. Fibonacci only works on a what trending market, be it an uptrend, which is in this case, or a what a downtrend, which is in this what case, right? So which is in this case. So Fibonacci works in these two cases. And plot a Fibonacci in these two case and plot it in an uptrend or in a downtrend. That is the only place you can what make use of your what fee. Don't try plotting it on a consolidating market, right? If you don't know how to trade a consolidating market, you shouldn't even be trading it, right? So that's it. So in the case of an uptrend, right? So let's say the market is trending up. We have this low right here. We have a low right here, right? So let's say we have a low right here, and we have this high. Then we had this what? This low. So in the case of an uptrend, you plot your fee in the direction of the trend. I want you to also put that down, right? In the direction. So if the market is moving up, that means you start from the bottom. When plotting it, you start from the bottom to the what? To the top. You plot from recent low to recent what? High, right? If the market is in a downtrend, you plot from recent high to what? Recent what? Low. Let me give you an example. Let's say the market is in a downtrend. So you plot from what? This is the high, the recent high to the what? This recent what? Low. From the recent high to the recent what? Low. So that is just it for free. Let's try putting it up here. This this is the recent low, right? To the recent what? High. Right. So in this case, we are expecting this market to what? Retrace to retrace to what? To pull back to what? Either this level right here, this level right here, this level right here, or this level what? Right here, or even this level, or even this level, right? As long as the market did not break out of this zone right here, as long as the market, as long as the market doesn't break out of, excuse, what is this? So as long as the market doesn't break out of this level right here, right, it is still a what? It is still an uptrend, right? The market is still bullish, right? So the market is still bullish. As long as the market doesn't break this level right, right? So the same is true for a what? A downward trend. Same is true for a downtrend. You plot from the what? From the recent high to the what? Recent what? Low. And as you can already see, we have a what? A retracement at the Fibonacci what? It's sorry, I'm trying to expand this. So as you can already see, we had this expansion, we had this retracement ending at a what? Fibonacci what level before what? Tanking down again, right? So as long as the market doesn't break this zone right here, this zone right here, right? We are still in a what? Pull down, we are still in a what? A downtrend, right? As long as the market doesn't move back to break this zone, right? In that case, you see something maybe like this retracement right here before what? Forming a what? Head and what? Shoulder pattern, right? So if you watch flow of this zone, right? So that's just it. That's just it. So remember, this is the only zone I pointed at. As long as the market doesn't break this zone right here, this one level right here, this level right here, we are still in a what? We are still in a downtrend. We are still in a downtrend. So I believe that has been understood. We plot in an uptrend. I said we plot from the what? From the recent low to the recent what? High. Why in the downtrend? We plot from the recent high to the recent what? Low, because we plot in the direction of the what? Trend. We plot in the direction of the trend. So I think that has been understood. So let's move to the chart. Let's move to the chart. So in trading, in plotting your feed, right? In plotting your feed, you want to see a clear trending market, a clear trending market. So as you can see, right here, the market was just consolidating. You can see we have the high here. Sorry, we have this high right here, and then we had this high, and then we had this high. So you can see the market is actually not making any clear sense. Right? You had this low. So this was running like a head and shoulder. You see that? So we had no clear trend. The market was just playing around. So what I like to do in this case is pick up something like this. We identify that this market is not good to be traded right now. That it's not a safe zone. Right? So this is a consolidation. Even at this level, right? I will not still be trading until I see a push up that breaks this zone. Then I wait for the pullback. So, but let's focus on what we are looking for, right? Let's find the trending market because that's the only place you can put your feet on. Okay, guys, look at this. Look at this, guys. Let me delete all this stuff. So, as you can see on this, look at you can see what we have here. You can see what we have here. This is a nice trending market. You can go to the daily and see two. So you can see from the daily, this is a nice trending market. Remember, you don't focus on what has happened here. This is like 2023, right? Because this is daily. So you focus on what is happening currently, right? So why did I say it's a trending market? You can see this is a high. So let's mark it out. This is a high, right? This is a low. This is the low first. Then this is the high. Then this is the what? Low. This is the low. But I want you to note something. This low brought about this high brought about this low, which brought about this high, which brought about this low. So these are recent low. These are recent low. We had this high, this low, this high, this low. What? This high. So what do you think they're having here again? They are having to what? A push to the upside, right? So now this is from the daily. Let me go to the flower so that you see it clearly. So it depends. Fibonacci, you have to know this too. Fibonacci works for all traders, all type of traders, right? Be you a day trader, a swing trader, a scalper, you can use Fibonacci, right? That's why it's a technical tool, right? You can use it in any time frame, in any style of trading, right? So you can see we have a low here. Well, let's start from this one first. Let's start from there is a low here. Let me go back to that day so that we have a clear view of what's going on. I believe you already know how to know when the market is trending. So how did I know that this market is trending? As you can see, I had this high, pull down, break of structure right here, pull back down, what break of structure again, pull back down. What am I expecting? I'm expecting another break of structure. But let's put our Fibonacci and see what happened. So you can see from here to this one. Now I want to say something before we continue. Like when trading Fibonacci, for me, right, some people will tell you that they are looking out for this 0.3% or 30% Fibonacci level, this level right here, right? The level on the I think orange zone or golden zone. But for me, I like to look out for this what 50% retracement. Now, what this simply means is that you see when the market makes an impulsive move, right? When the market makes an impulsive and it starts retracing, right? If it retraces 30%, it will touch this level, right? So if it retraces 50%, it will touch this level, signifying that this whole move that the market has retraced what 50% of the impulsive move. That is, let me put this. Let me use this so that you understand. You have this is an impulsive move. So you have a retracement maybe like this, something like this, Sorry. Let me do that. Let me do that. So we have an impulsive move. You start having a correctional move, so something like this, and you have the that is why it's a correctional move, but it doesn't go straight, right? So what am I trying to say? I like to see the market retrace 50% of the impulsive move. So from this move right here to this place right here, if this market stops right at this zone, if this market stops right at this zone, that means it only retraced 30% of this whole move, right? I like to see the market retrace at least 50% of the whole move, at least, right? Most of the times, 60% of the what whole move or 61% of the whole move, right? So you get this often, you can get this 50% and 61%. You can also get this 70 something percent right here, right? But these two are most often, right? This is where the market most often, forms a double bottom and then pushes on back or push back to the upside, right? So I like to see the market which is at least 50 to 60% or 61% of the whole move. Then I'll be looking out for a what? For a chart pattern or a reversal confirmation or something like that. Maybe you can list them. Boom, you have it to the upside, right? So that is it. That is what all these levels are indicating. So if the market is touching here, it's just interesting 23% of the what whole move of this from the recent. This is the recent low. This is the recent high. So if this market is coming down to this one, that means this market now currently is retracing to what 61%, right? It's retracing down 61%. So that means I will be looking to take this one trade because I like to take trade as long as they are what on the 50%, right? On this 50% right here. This is the 50%. This green zone. This green zone is my 50%. So that's why I set it up like this. Let me set this up so that it will be easy to point out. Let me switch all this off. Let me switch all these things off. So I don't like to see the 20, not the 40, not the 0.2, Nope. So and I don't like to see the backgrounds. So I like them clear, I like them to be very clear. So I'll put this 50% as so this is the danger zone. So this is the green, yeah, right? Yeah. So let's just leave it like this. Let me change this color to something else. So, okay. So let me change this to something else, so golden, so that it will be more vibrant and you can see it. Yeah. So I think that's it. That's it. Let me now tune up this thing a little bit so that all of us can see that. So let me replot it. So we have this low right here, below, and we have this high. So let's plot our feed from here, you see, to this zone. Now notice I'm making use of the what? The tip of the wick. The tip of the wick, right? I'll still give you the rules, right? So this is also from the tip of the wick to the next tip of the wick, right? So as you can see right here, the market increased 61.8%, right? So once the market, this is how I trade it. When the market is at the 50% retracement, I'll start looking for a what? A candle confirmation or a chart pattern or something like that. Then at this zone, let's say we take the buy because we already knew that it's going up, right? So we took the buy, stop loss. You can place a stop loss below here, depending on what you're targeting. So this is 98 and take profit. Then see the next level give us what? This one is 2 already. This one is 2 already, right? So we have another retracement right here. Let's see that retracement. Let me delete this. So let's see this retracement. You see that, see this. So as you can see here, this failed to touch any of my zones. It didn't touch the 50%, it did not touch the 61.8, did not touch even the 7, right? So I'm not taking this trade, right? As a Fibonacci trader, I'm not taking this trade. Why? Because it did not meet my my confluence, it did not meet my entry rules. So I won't be taking this trade, right? So I will be waiting. So in this next one, look at this again. On the tip of the week right here, the next tip of the week, let me put it up here. So what do you see here? Guys, what do you see here? Look at this. So you can see that from here already, at the push of this candle, you are in, take profit above here. So you can either place your stop loss below here, depending on what you are seeing, right? It's advisable to place your stop loss below the recent low. right? And then take profit, take 1:2, something like, you know, something like this, because we're expecting this to break this level, right? So something like this, then take profit above them. So that is it for this one. That's it for this one. I'll still be taking us on the back testing, getting about back testing. Let's look at another pair. Let's look at another pair because we want to see. So this is just a reversal sign. Let's see trending markets. Yeah, yeah, guys, look at this, look at this, guys, look at this. So you can see I already have my Fibonacci zone up there. So you can see at the touch of this 61.8 or 0.618, you can see what's happening there. You can see this heavy pull down, right? So if the market comes back to form a double top, what do you think I'm doing? I'm shorting it to the downside, right? So, but with that being said, let me show you guys. So let's say I'm a day trader, right? Let's say I'm a day trader. You can see this is a clean chart. This right here is a what? A clear chart. You can see, I can even plot my trend line on this. So with what I'm already seeing here, guys, with what I'm already seeing here, right? Let's plot our feed. Let's plot our feed from this T, this what? This is our next T. Though this is a zone, right? But as you can see, it did not work out. So we can move this to this zone and then plot it high, right? So where did we come to before reversal? We came back to what? 0.67. Now, what do you think I'm doing there? I'm what? Buying. I'm buying. Say I'm a day trader, right? Now I'm trading as a day trader. So I'm buying to what? This level, to the next level. This one is to trade, right? As you can see, right? So the next one, let's do this. I want to be fast, guys. I want to be fast. So this is the next low, and this is the next high. Market is pulling down. Let's see from here up to this zone. Now, did the market come into our zone? Yes, but the market did not touch this 0.6, but it thought it triggered at this zone, right? So what do you think I'm doing here? As soon as I see a confirmation, a candle confirmation, I'm what? I'm in for this. I'm in for this, right? I'm in already. Stop loss. Look at this. Look at this recent zone. Let me do this. Look at this recent zone. That's where my stop loss is gonna be. This recent low, right? So I'll try as much as possible to catch 1:2. Yep. So I'm out. So next one, this is the next low, and this is the next high. Guys, what do you see? Touching our 0.618. What do you see? What do you see there? See a heavy push to the upside, right? Like it went like a flash. See, boom, to the upside, right? So that is it. So that's what do you think I'm expecting here again as a day trader? So what I'm expecting is what? Even if the swing trade is showing me that I'm in a downtrend, right? But for this now, I'll be waiting for what? A return to my Fibonacci level, guys. A return to the Fibonacci level. Let's see right here to do so. So you can see it's already touching our what? Our levels. It's already touching our. So why am I not taking this trade right here? Why am I not taking this trade right here? If this market should come to trigger this zone, at least it should come a bit low. And also my confirmation should be completed, right? So it has not completed my confirmation. At the completion of it, even if it is right here, I'll take the trade, right? So that is Fibonacci for you, right? So be careful. This won't work out every now and then or something like that. You want to be working out, steadily, or it will keep you consistent, but you won't have. It's not 100% win rate, right? This is not 100, but I'm gonna like I'm sure it will give you at least 50% if you follow it well. At least 50%. That's what you need to be profitable, right? So look at this again. This is the low. This is the high. Let's plot our fee from this zone to that zone, right? What do you think I'm doing right here? What do you think I'm doing? I'm buying to the upside. Now, guys, let's stop doing all this. Let's go to the daily. Let's go to the daily. Let me look for a good trend on the daily because you trade according to your what? According to your style of trading. That's what you find. You look for. Sorry. So I'm looking for a good trend. Okay, this is a good trend. This is a good trend on the daily. Now, guys, let me show you. Let me show you something. Look at this. Let's just do a little back testing. Let's do a little back testing. So let's say that we were around when this market was say around here, right? So as you can see, let's count this. So we had this low, high, lower high, sorry, higher low, higher high, equal low, higher high, higher low, a what? A higher high. Now the market pulled back to this zone. We should be expecting for a what? A bullish move to the upside. But let's look at what happened, right? Let's look at what happened because this is our zone right here. So let's look at what happened. So you can see the market came and did what? And broke this zone. The market has now broken this zone. So what do you think I'm expecting now? Since this zone has been broken, I'm expecting the market to pull up. Now I would like to plot my Fibonacci, but I will wait for the market to show me that it has started what? Reversing by what? Breaking this structure right here. If the market breaks this structure, I will pull out my what? Fib level. Now I'm showing you how to pull it out though. Now wait. Now good. You can see what the market did here. Market created this high right here and did what? And broke it. Now, if you press play, you see that the market is continuing. So you see, so even when the market was around here, we already knew that it's coming up, right? It's what coming up. So we plot our field from this zone to this zone to the tip. Look at it. So this is what I will be having. Now, where am I going to be taking my trades? That's where the common your rules come in. Now, what do you see here? What do you see here, guys? Look at this. What do you see here? This is a candle what? Confirmation. This is a candle what? Confirmation. Look at it. Some people will call this I think they call it a morning star or evening star or whatever. Right? But at least I know that this is a confirmation that the market is about to go what? Bullish, bearish, sorry. Bearish move, right? So I'll get my short position, enter right here. So what I might do is I will put my stop loss above this level because I know that even if this market starts to reverse back, it shouldn't get past this level. Else I'm wrong, right? That's why I said that it doesn't have 100% way. Then our target 1:2. So this is like 1:2 right here, right? Let me remove this. So this is like my 1:2 right here. So this is like 1:2, right? So let's press the play. So you can see that from what you are seeing here, you see that the market did this, pulled down to this zone, right? Pulled back up. But this is a swing trade. So let's continue. Let's continue going. This is a swing trade. So you see now, what did you see? The market never came back to what? Take out this zone. To take out my zone above them. The market never came back to take out this zone. Rather, it did what? Retested and did what? Continued to the downside. Now, at the touch of this zone, I'm already out, say 50% of my trade. But let's continue. So you see this? So this is where you're taking your what? Take profit. Right? So that is where you're taking your take profit. That is 1:2. 1:2. That is just it, guys. This is it. This is what I'm talking about. Right. So at this as this one is also going back up, right? I know that you shouldn't cross this zone right here, this zone. You shouldn't cross this, right? So what do you think I'm doing? I will plot my fib level, just like you saw when I moved into the. I'll plot my fib level from here. This is remember in the direction of the whole move, the direction of the trend, right? So where do you think I'm waiting for it? I will be waiting for it around this zone. I'll be waiting for it around this two zone because I love this zone, this 0.618. I love it. So I'm waiting for it around this two zone, right? I always like it when the market gets around these two zones, right? So that is it. That is it. So I just did a practical example right now. I just did a practical example. So as soon as the market gets around there, I will start my what? Shorting. I will start my shorting. So you see, the market is already around there. So I'm looking out for a what confirmation to take it to the what downside. I'm looking out for the confirmation. You can see I'm already having one here. Already having one here. This is just trade. So as you can see, I'm already having one here. What am I waiting for? I'm waiting for a what? Break of structure. This is important. break of structure, then retracement, and then what? You join. I believe you understand what I just said. Now I'll still make a topic and I'll still treat on this structural move, right? So that you understand better. Let's look at another example. Okay, let me take you guys through this one that I'm taking. So as you can see, I'm currently on this trade, right? It's weekend right now, so I'm expecting this trade to go down. But let me just explain what I'm seeing, right? So you can see that we had this high, we had this low, we had this high, this whole move, right? But it failed to break this high, right? Pulled back down, pulled back up, failing to break this what? High again, right? And created a what? A lower low right here. This is a lower low for all this move. The market moved back up, and we were expecting it to what? I was expecting it to react at some level, but it came back right at the beginning of the what? At the beginning of the trend, right? And then that was where when I saw the what? The my entry, right? So I didn't, as you can see, I didn't enter immediately. No, 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 I don't do that. Right? Why did I not enter immediately? Because I know that there is still a chance that the market might consolidate. But the market didn't do that. What they rather it gave us a what? A head and shoulder. This is the shoulder, this is the head. So this is what I call a reversal move, right? Then I started shorting to the downside. So guys, look out for these things when trading Fibonacci. Whenever the market is on your Fibonacci level, right, you start looking out for chart patterns, candlestick conformations, and all these what they call them, entry triggers, right? Start looking for entry confirmations so that you don't get caught trading the wrong direction, right? Don't get caught. So look at this move again. You had all these moves to the downside, right? This is on CAD CHF, right? You had all these moves to the downside. Now the market is consolidating. This is a consolidating market. So I can't apply Fibonacci around this market, no. But I can apply it on this when this market was creating this. Guys, let's do this. Let's do this. Let's do this one. Let's check this one out again. Let's check this one out. Let me do a replay. Let me do a replay right here. So guys, let's check this. Now, this is the last one I will be doing. This is the last one I will be doing, guys. So we had this high. Look at this. Let's count it. This is a low. This is a higher high, higher low, higher high, higher low. And what did you see? The market failed to break this high right here, and what? Broke the low. So at the breaking of this low, I'll count that as my what? My number one confirmation. Right now, the market has shown me that God's power is like this market is about to change direction, right? So what will be my next move? What will be my next move, guys? My next move is to what? Plot my Fibonacci. Plot my Fibonacci. Now the market is pulling back up because this is a confirmation candle that the market is about to reverse, right? But let's see, because I need more confirmation. I need more confirmation. I mean, this is like we call this impulsive retracement or expansion. So you can see anything when the market is trying to retrace. It might create a high, create a low, create a high, create a low, create a high, create another low. You think that the market is about to reverse. You see what? Boom. This is one of the reasons you need your what? Fibonacci. This is one of the reasons you need your Fibonacci. So you can see here when the market is creating a head and shoulder, an inverse head and shoulder formation. Let me see. Yeah. So how did I know? How do I know that? Look at this. This is the shoulder, right? This is the head. This is the right shoulder, and this is the move, right? The move we are expecting. So now the market is around this zone. I'll pull out my Fibonacci from this zone. Remember, in the direction of the trend, that is the way you plot your Fibonacci, right? So I'm waiting for this market to either get to this zone, waiting for it at this zone. This is my first zone. I'm sorry, I shouldn't be doing this, but so this is my first zone. It should come into that zone. Once the market touches that zone, let me know. Once it touches this zone, we'll start looking for confirmations. So let's go. You see that? What do you see here? A week, just week thing and start what? Since we don't take that kind of trade, I think we should wait for what? Proper confirmations. So you can see after that, the market didn't give us any other confirmations, breaking this what? This low. So I'll wait again. I'll wait again. Then I'll plot my feed. Wait. Let's see. Let's see. Wow, the market is good. So what do you see here? What do you see here, guys? Let me take this element back. I like to be telling you guys what I'll be doing on at this case. So we just had a break of structure right here, but I was waiting for the market to show me a good reversal sign. So from the week to the what next week. So look at these guys. This is my 0.6. I told you I love this level. Like I love this level so much, right? So at the touching of that level, what do you see the market do? It gave us a bearish confirmation pattern, which is what? A bullish, a bearish engulfing what? Pattern. First, we have what? Weak rejections, weak rejection, bearish engulfing pattern. What do you think you're gonna do? What do you think I'm going to do? I'm shorting from this the next candle. Right? Stop loss will be here, say above this zone or even above this, just above this level right here. Right? Then take profit down. Let's see. Boom. So take profit has been hit without stress. Right? Now let's check off another one. Let's go to another one. Let's see. So we have this level right here. Don't know. Let me just plot it out sharp. Right. So I have something like this. This is a level. This sorry. This is our next level right here, right? This is our next high, our next lower high, right? So let's see what happens when the market starts retracing. So now the market has started retracing. How do I know? Because I have the double what? Bottom, right? But let's see. Let's see that. Let's see what the market is doing. This is what I'm trying to tell. This is expansion, right? It doesn't move clearly. So we plot from here, this zone, right? You can see at the week, at the week. So let's wait. The market is already in our zone, right? But we need confirmation. We need candle confirmation. We need candle confirmation, guys. We need candle confirmation. Good. This is another candle confirmation. Look at this. Look at this, guys. What do you see? Morning star, evening star, or what? I don't know how you guys pronounce it, but this is a bearish confirmation. So I'm going what? Bearish right here. Going fully bearish, right? Going fully bearish. Stop loss above this. So my take profits. Okay, let's just be taking 1:2, 1:3. This 1:2 right here again. Let's just be taking it this way. So boom, yeah, take profit smashed. You are seeing the way these things are working like magic, like it works like magic, right? So from this zone again, let me delete this. This, like I said, this is the last one I will be doing, and I might state the rules, right? So this is the low. So let's wait for the retracement to start happening. We're waiting for the proper retracement, right? So wait. No, this is okay. This is not part of what we are doing today, but I would like to talk on this maybe next time. So I'll plug my feed from here again, right, to this zone again. And what do you see here? What do you see here, guys? Candle confirmation, double top, right? And the bearish engulfing pattern. So what do you think I'm going to do? I'm going down, baby. I'm going down, right? I'm selling. So you can see that throughout the whole this whole experiment, we haven't had any what any loss, right? So why is that? Because this is the higher time frame, right? This is the higher time frame. Most confirmations here are very, very what accurate, right? They are like what percent accurate? Like I can't determine, but I know they are very accurate. So 1:2. So you can see that maybe this is one of the losses we'll be having for now. Oh, not even a loss. You did not even lose. So that you can see that yes, we are still in the game, right? We are still in the game. Upon everything that happened here, we are still in the game, guys. We are still in the game. And if you have plotted your Fibonacci the same way from here to this zone, right? You see that we had a confirmation here, right? We had a confirmation right here. Because I don't like to take it just like that. We had a confirmation here. So even if you were shorting and putting your stop loss above this level or at this level, right? You might have gotten what stopped out, but that will be our first what loss for the whole move. Right? So this would have been a loss if we had entered around where here, where we saw our what confirmation. But I don't enter on this type of confirmation. I like confirmations like candle patterns, right? Like candle patterns or double tops, something like this. and this right here, this is a good confirmation. But let's keep going. Let's keep going down. Let's keep going. Let's keep going. So you see, this is when we started having that consolidation, right? So that is just it, guys. That is it. That is it. So you see, we had all these moves, all these wins, right? Even at this level, I would have taken this trade still because this is a chart pattern. I'll be talking about chart pattern on my next videos. So be sure to subscribe and turn on the notification bell. I'll be talking on the chart patterns and other ways of taking trades and other confirmations you can have. You know, when you are trading with the Fibonacci, you need to have other confirmations added up, like other confluences, right? So I'll be talking about those confluences on my next video. So, but for now, these are all we have to do. So let me state the rules, those rules that I said. Let me state those rules. Let me state those rules. Here's my text. So my rule number one, let me just type them out. Let me type them out. Number one. Wait, number one. So number one is what? Plots, or should I say plotting of what? Plotting of fee. Say fee should be done in the what? In the direction of the what? Of the trend. Of the trend. So that's number one. You must plot your Fibonacci in the direction of the what? Trend, just like I've been doing. So the second one is what? Wait for. Now this is when it gets hard. Waiting. So wait for at least what? Wait for at least 0.5 to or what? Or 50% fee or 50% fee retracement. Right? What? Retracement. So that is number two. And the third one is what? Look for what? Look for entry confirmations. What are your entry confirmations? You have to have entry confirmations. So you look for them. Confirmations. So this is the trend, right? This is the three things we need to look at. First, you plot your field in the direction of the trend. So if the trend is a downtrend or an uptrend, you plot it in the direction of that what? Trend. Then if it is a downtrend, you still plot it in the what? Direction of the what? Trend. And secondly, like we said here, secondly, you do what? You wait for it to retrace to the what? At least 50% Fibonacci level, right? So where is our Fibonacci level? This is the 50% right here. So at least wait for it to retrace back to this zone, at least to this zone. Then you look for what? Candle what? You look for confirmation or candle confirmations, anyone you like to wait for, right? Look for those candle confirmations. That is just it. That is just it, guys. That's just it. So this thing is very easy. Right? Don't try to make it hard. And plot from the week. Plot from the week. Whenever you're plotting your Fibonacci, make sure you're plotting it from the week. From the week of the what? From the week of the candle. That is week. You know what's week? I believe you know what week is. This is the week of this candle. This is the week. The tip of the week. This is the week. Right? This is the week. Right? So this is a week. A week. Right? So you plot from the week. That's it, guys. That's it. I think that's it. That's it. So, guys, like I said, please subscribe to my. If you enjoyed this video or you learned something from this video, please subscribe to my YouTube channel, like this video, so at least it can be recommended to as much people as possible. Because I know that people need to watch this video. They need to learn from this video how to plot their Fibonacci and other stuffs, right? So that is it. And guys, turn on the post notification bell because I'll be releasing another video on how to mark out your market structure, how to know the direction of the market, right? I'll be posting another video on how to know the direction of the market so that this whole thing can be easy for you, and also how to get your entrance, right? So that is it, guys. Thanks for watching this video to the end. You are the best, guys. You are the best. Thank you.